so kind of familiar with many of the mental challenges and difficult times that an entrepreneur goes through the growth of the business, and that's why we're excited to help support them. We started investing in late 2016, early 2017. That's when the fund closed. We have about 17 investments now in Egypt, several of them with secondary rounds as well, across a broad sector. Our focus is primarily Egypt. We do have a few investments outside of Egypt, one in Dubai and a couple in Jordan. But we're sector agnostic. We're looking for just high growth technology enabled businesses in the region.
Tamer?
I'm Tamer Aizer. I'm a principal at Sawari Ventures. The firm has 3 partners, Ahmed Alfi, Hani Sumbati, and Wael Amin. A mix of financial service backgrounds and entrepreneurial. We invest anywhere from $1 million to $3 million per company and up to $5 million for the life of the company across Egypt, Tunisia, and Morocco. Currently, we are definitely sector agnostic and focused on Egypt, and we're looking to start investing in Tunis and Morocco in the very near future.
Very good. Bassem?
So my name is Bassem Muftah. I'm the general partner for Global Ventures, which is a VC fund based out of Dubai. We're primarily looking at UAE, Saudi, Egypt, and now increasingly into sub-Saharan Africa. So we have a Middle East and Africa focus. Also sector agnostic, also 1 to 3 million. We've been doing a little bit earlier stage on some fintechs just because of the way that industry works, and looking to do something similar around health tech, to sort of pick up earlier stage and help accelerate given the COVID-19. And we can obviously talk about that a little bit later. Have been in the VC, well, I started in VC, funny enough, Karim knows the story, back in 97, 98, which seems like a
That's how we first met, yeah.
20-something years ago, if you can imagine. We actually have some deals from back then, if you remember, Karim.
Yeah.
We crossed over on. But I did VC out in California for a little bit. Then I did my MBA, and I came back to operate businesses for Reuters. So this was the VC arm of Reuters, and then came back and operated some businesses for Reuters. The last one I kind of helped Reuters get rid of, exit, if you like. And then now returning into VC for the region, because I do truly believe it's the time for it.
Ansi?
Hi, this is Onsi Sawiris. I'm co-founder, managing partner at Hoff Capital, a US-focused venture capital firm. We founded the firm along with 2 of my co-founders in like 5 years ago, with the goal of taking part of the innovation and the tech ecosystem in the US, leveraging our networks internationally. So we represent about 70 LPs and manage about 150 million in AUM at Hoff. Primarily, I would say US. We have started looking a lot closer to the region. We feel that timing is excellent. We've made few investments out of Hoff in Africa. We are thinking about our next fund that will have a dedicated allocation to the Middle East and African region. But in the meantime, we've also set up a local Egyptian VC firm called Foundation Ventures, which is dedicated to Egyptian technology ecosystem and to invest primary seed and Series A. It's a smaller fund that we've launched, but very excited about being more involved in the region here.
All right. Well, we have like the wealth of experience all in one Zoom call. My first question is, basically there are a lot of trends that people are following globally, and I guess the question is, locally, what do you think are the top 3 sectors to follow in Egypt today? Are some things way overhyped? We hear a lot about fintech, but is the talent and opportunities really there? Is healthcare the new fintech? All of these conversations are happening. What are you as individuals and investors in the market, what are the top 3 sectors that, when you get a call about a company operating in that segment, doing something specifically unique about it, you'll be like, yeah, I need to meet this guy or this woman ASAP, and I'll free up my calendar for it. So I'll start with Karim and then Basil, and we'll follow up with other questions for Onsi and Peter.
Well, I think an overarching theme that we look for, and we're starting to see many more interesting businesses in that space in Egypt, is things that are focusing on the lower tiers, socioeconomic tiers. So things that have a really, really mass market appeal. We like the penetration of smartphones at that level has increased dramatically, and there's a lot of interesting opportunities there, whether it be fintech or health tech. So providing that level of access at a reasonable cost. I definitely say health tech is interesting. We haven't seen many that have interested us so far, but we expect to see many more interesting businesses in that space. And as you know, my background is health. So that's an area that I particularly focus on and look for. And it's anything that improves reach and access, cost or quality. And I think those challenges are global in nature, but particularly in emerging markets, even more in sub-Saharan Africa, highly dramatic. I mean, the number of physicians per 100,000 population in Africa is far below anywhere else in the world. And there's interesting opportunities there to provide technology-based solutions to improve that access and improve the cost and the quality. So that's definitely one area where anything that's healthcare, and that's also because of my background, something I'll always look at. The other area, which is very specific to Egypt, is probably agriculture and any agri-tech businesses. But even within that, I think it's generally the supply chain in Egypt, whether it's agriculture and foods or supply chain as a whole, highly fragmented, quite inefficient. So anything that supports the supply chain economics and improves that process in Egypt is very interesting to us. And again, we see that as a platform that once works here in Egypt can work in a lot of other similar economies, whether they be in Southeast Asia, Latin America, or in sub-Saharan Africa. So there's a range of areas there. We've made some investments there, but I think there's still more to see. Just getting basically core supplies into the manufacturing chain and then out to the consumer. So that whole process, I think, is challenged in Egypt and challenged in a lot of other countries. And I think technology has a role to play there. I'm not going to talk about fintech because I'm sure fintech is on everyone's mind, but that's always an enabling infrastructure across all of these. So there's always a need for financing in that space, and always a need for other savings products across that. The last thing I would like probably to touch on in Egypt that I think is interesting, and we have a unique ability, is core technology services. So Egypt does have a very unique talent base in building sort of let's call it chip level IP in a broad range of areas, but particularly in digital analog circuits and RF circuits, MEMS-based circuits as well. So there's a whole range of talent in the country that's capable of doing that and has built very interesting businesses in the past, and we keep on looking for ones that we can participate in as well. Again, that's more a global IP kind of business, but I think that's something pretty unique in Egypt that we have an opportunity to invest in and promote and build business. That's probably the three sectors that excite me.
I'm not sure you left anything. So let's see.
Listen, I'll add this challenge to you. What are some of the sectors that also make you cringe? So quickly, what excites you, but sectors you typically shy away from because it's also Egypt, and you're like, no, I don't want to get involved in this.
E-commerce, no.
Consumer e-commerce. Basil and I are on the same page on this one, yeah.
Listen, I think a lot of what you touched on, Karim, is great, and I would just add to it. We also see two other trends. One is about companies starting to expand from the UAE to Saudi, or Saudi to Egypt, or Egypt to Saudi, or Saudi to UAE. Yani, we have this chessboard of movements. And again, that requires capital. It takes a different set of skills, maybe even some different type of management. So as investors, we like, solid businesses that are looking to move to another geography where we can sort of piggyback on the great work that, Karim or Tamer, Sawari, Algebra, Hof, etc. have done, and then sort of accelerate that growth. I also think, the internet started in the region very much as a catch-up to other things around the world. A lot of emulation. We needed a website for this and a website for that, and a lot of e-commerce. Now we see entrepreneurs coming in and building infrastructure. So fintech is obviously infrastructure because that's payment gateways and so on. But we see cybersecurity is a very interesting space, and we're coming across some very interesting entrepreneurs working in that area. We look at some of the software, productivity software, operational software, needed to manage logistics or optimize, things, not things that are logistics drive, but logistics optimization or productivity optimization and things like that. Those get interesting for us because, we believe the internet's got two sides, right? There's the front side, everybody sees and consumes it. And you definitely have a lot of growth there because there's still a lot of people not online, but you also have the infrastructure behind running efficient, online businesses that's required. And I think that's something that the entrepreneurs are finally getting around to working on.
Right. Onsi, given you are investing both with Half Capital globally, and with Foundation Ventures, you're very actively investing in Egypt. Where do you see Egypt following versus leading, and where do we have an advantage to lead?
Look, I think we have a lot of unique problems to solve, not just in Egypt, but in our region. I think we underestimate the population. So we have 100 million people that need a lot of improved services. I think we are definitely, maybe with COVID, it was more of you had to go and work from home for some period of time. For that, probably was an eye-opener to a lot of bigger firms, smaller companies, to the consumer as a whole, to drive some of that catch up that happens with the US. And when I was in New York last week, and the disruption is minimal because you get everything delivered anyways pre-COVID. Now, for example, in Egypt, there's a lot more push and focus towards digitalization. So I think that's an opportunity for entrepreneurs to take advantage of. And especially that when you look at startups, they all face their own problems because it's very early stage. So I think a problem like Corona will probably affect the larger big players that will get hit in certain industries. But startups just face so many day-to-day challenges that they have to keep problem solving for. And I feel in our world and in tech investing, now is a good time for entrepreneurs to try to take advantage of that. And I think the funding is there. The guys on this panel, myself, I think we all have dry powder. We're all ready to back founders. So I think from an Egypt perspective, there are obviously industries that may rely a bit on the infrastructure being there. I think I think fintech was said maybe in the last 10 minutes a few times. I think obviously it's a big and exciting industry for Egypt specifically. I know, the regulations are all about to come out to enable true and proper digital banking. I would love for private sector investors to have access to, for example, retail deposits on the digital banking side at some point in the near term. So I feel like that sector obviously has a lot of excitement around it, given the environment. I think in the US, there's a lot more that's coming out, and we've seen that in the past. These nice to have luxury type startups that just make life easier. But I think in our side of the world, there are real problems that need to be solved. I think connectivity has enabled entrepreneurs to really absorb a lot more of what is happening in the West, to take some best practice from there, but apply it to the local problem that we need to be solved here. And I think some of these problems were mentioned. I think supply chain, the whole logistics industry in Egypt, financial inclusion for the poor, healthcare is a big mess, and I think it's a shame that's the system that we have in place right now. Insurance is almost non-existent, and actually Besser and I, we have a co-investment together in a healthcare company out of Africa called Helium Health, and I believe those guys are onto something really big. So I think we have different types of problems. A lot of them are a bit more fundamental and game changers. And I think now is really the time where we have also the right entrepreneurs solving these problems.
Yeah, I absolutely agree that it's a highly underserved market where, with an enabling infrastructure, which is where most of the investments are being tackled now, whether it's on the financial inclusion side, health tech, you really have an opportunity to transform the market on different layers. But Tamer, do you agree with this, that Egypt is a big enough market that if you make it in Egypt, you can make it anywhere? Like even things like Helium Health or Tidby, anyone who's not in Egypt wants to be in Egypt and scale, or you're a local company scaled in Egypt, you can go anywhere regional from there. Where do the where do they fall? Is Egypt enough of a market to scale in, and you don't need to think beyond Egypt?
It depends on how big you want to get, right? I think you can really set yourself up quite nicely in Egypt, especially in the issues or areas that Karim was talking about, which I call primary problems. When you're solving primary problems, be them health or access to finance or food, agriculture, this type of stuff, these problems are shared by more than half of the world, right? I don't really need to scale in rich countries. My experience as an Egyptian entrepreneur might not necessarily be transferable to Sweden, might not necessarily be transferable to the US, might not necessarily be transferable to the GCC, but it's definitely transferable to a place like Brazil. It's definitely transferable to a place like Nigeria, right? The dynamics of these markets are a lot more similar to Egypt than what I find most entrepreneurs aspire to expand to, right? So if you really sharpen your claws and your teeth in a market where there are some really fundamental problems like Egypt, find another market with similar fundamental problems, and then you can really have a much easier sort of transition to it. So you can really make it in most places if you make it in Egypt, but stopping in Egypt versus not is a function really of what your strategy is. Do you want to diversify? How big do you want to get? So, but I would always bank more on a big market where an opportunity really exists. I take a market that's 100% what I'm looking for versus a team that's 100% what I'm looking for. I'd compromise on a team a little bit. If it's in a really good market, they might actually make it despite themselves. But if I invest in a bad team in a good market, they might get crushed.
That's a great segue to my next question. This is, how do you evaluate the quality of the pipeline coming out of Egypt? Do you have to compromise on team? Is there anything do they meet your bar? And I'll get to you, Auntie, next on this one, because you also have, you see a lot of people abroad and here, so.
So يلا, let's begin the controversy. I disagree with Tim, by the way. Just let's نبدأ كده فتحة. And I guess what I would say is no. I've seen a lot of good ideas that are doing well in Egypt, trying to get out of Egypt and really struggling. Communication's an issue. Working with investors, understanding nuances of market. It's not just if it works in Egypt, it works anywhere. You look at some of the players, that are working in the sort of trucking industry. One of them in the Algebra portfolio, Trella, and you have Trucker coming out of UAE. The battleground is going to be Saudi Arabia. Very different philosophies about how to go after the market, who to partner with, who to, how to build the technology, how to invest. And I'm just, I'm taking an example so that we can just jump into it and start really having this debate where HBS Club isn't going to do this easy, right? But I guess my point being is, I don't think it's that simple. We are looking I look at entrepreneurs in Egypt, and there's a lot of, but with $1 million, I can build a big team and I can have a large number of people. Reality is you have a higher turnover going on technologists, really high turnover, which is a problem. You have a very low, basket size, if you like, or deal size from a perspective, which means you need more volume in order to reach a certain amount of scale. And definitely you have unique issues in Egypt as it relates to whether, again, logistics or payment or whatever that don't translate elsewhere. And so again, which problem are you solving when you're thinking about scaling outside of Egypt? I still believe team is the most important thing. And I mean that I definitely broadened my mind about what makes a good team. And I've tried to see the world in a wider perspective, so that it's not classist or based on university or background, education, or the level of English. I don't think that's it, obviously. But there used to be some filters there that existed that maybe, you have to sort of let go, because there are some amazing Egyptians coming out of some very interesting backgrounds, doing some very interesting work, and you have to be open-minded to see that from their world and understand why they're solving that problem and the way they're going about doing it. But agility, ability, hard working, discipline, honesty, transparency, those are things that are uncompromisable in my mind across the board. So those are my 2 cents.
especially as you get into larger rounds and you're starting to talk to regional and global VC players, these things are critical because you could be, you know, a hustler in your market, but when it comes to growing outside of Egypt and even going into Saudi and other GCC countries or Africa, you know, how they communicate, how they present their companies, and how they really go about building their teams and attracting the right talent becomes crucial. Unsi, what do you think of the quality of the pipeline in Egypt, and how do you compare it to globally the quality of pipeline you have elsewhere?
Look, I think it's unfair to just do a simple comparison between what we see in the US and what we see in Egypt or the region. What I have, obviously, I feel the ecosystem here is starting to mature. I think entrepreneurs are starting to really educate themselves about this space and about what it takes to be an entrepreneur. I think people are starting to take a lot more risks. I think they're starting to slowly be able to access funding that aligns with a healthy ecosystem. Because I think applying the private equity mentality on VC, on entrepreneurs, just doesn't work. And I think everyone on this call can agree to that. And I think why, and I think we got a question actually in the Q&A that PE is quite strong, but VC hasn't not matured in Egypt. I think one of the reason is the LP networks or the LP base that we could tap into, especially in Egypt, are still a bit far from. I think the mindset needs to get there. Is you're not just, you are obviously investing financially because it's high risk, high reward, but there is that risk. You need to approach it in a systematic manner to be able to diversify and to be able to help create that ecosystem. So without a more professional, or I would say more experienced LPs on this asset class, because you have to do two things in Egypt. You have to educate LPs on the asset class as a whole, VC, but also on investing in tech, because it's completely different than doing real estate, which everyone sort of does in Egypt. So I think that's one hurdle for the ecosystem. I think from the entrepreneurial side, I've really enjoyed seeing that cross-border a lot more. I think a lot more entrepreneurs spending time in the US, whether it's at accelerators or at programs like YC and all that. I think they get to see and learn so much in such short time. I think the one maybe negative byproduct is, I think when someone goes to YC, for example, or just spends a week in San Francisco and comes back to Egypt, somehow the company becomes 100 times more valuable. Sometimes expectations become 100 times more unrealistic. And whereas we need to be founder friendly and we need to focus on that aspect big time, because that's part of what we do. I think there has to be a fine line, especially the earlier rounds, which we all know there's very little science to doing these valuations. And if you get into too many complex things, it becomes not good for the healthy growth of the business. So I think some of the investors here, when they decide to go a little earlier than what they're used to, they'll do a safe, or they'll do a convert. They'll just get it in there as an option value. But I feel there needs to be a bit more focus on kind of execution, on problem solving, then on haggling and discussing valuations and always optimizing for the best outcome. That's just mainly for the earlier raises, because the more smooth and the more realistic things are early on, the better chance you have of raising multiple later stage rounds at valuations that you expect. If you raise a seed round and 10, you wouldn't want to do an A and before 30, 40 million valuation. So you really need to prove yourself and have the traction that you need. So and it's not like dry powder is everywhere in Egypt. I think institutional funding is slowly coming together. I think obviously we have colleagues here who have that institutional funding, but I think we'll need a lot more to push through. And I think I would love to see a fund come out and say, I'm a growth capital fund focused on tech, purely B rounds and C rounds. I think we're missing that next wave to take companies potentially all the way through to IPO. I think when companies reach Series Bs and beyond, they start really relying on support from international VCs to come in and help push that along. That's my 2 cents there.
No, absolutely. I think that, there's a lot of education that's happening for LPs to understand the market and get more engaged in venture capital. But you all as investors also have an education mandate to the entrepreneurs. And I know Tamer struggles a lot with educating entrepreneurs on due diligence and the pains of documentation. But this is the important work to be done at a Series A, because you're managing institutional money on the one hand, And on the other hand, to really prepare them for a Series B or Series C, this is where, you know, real work, where you have to roll up your sleeve for not just value creation, but having the right governance and that right investment process in place. So Tamer, why are you complaining about due diligence and documentation in Egypt? It's a walk in the park.
I think a lot of the service providers aren't accustomed to transactions of that size, right? So they, at least in the size that many of us sort of work in, and they're coming in having worked with private equity firms for quite a while, or really large corporations on M&A transactions. Their approach towards DD is fairly similar, which has a tendency to not scare the entrepreneur, but make them feel a little bit weird. It's also, a lot of it is stuff that they have no idea what it is. A lot of it is really unnecessary. So they just spend a lot of time a lot of time is lost in the battle. So I don't have this, no, but you should have this, but what about this? And there's a lot of really small stuff that people spend a lot of time on. And the entrepreneurs are usually underprepared for what happens in their first priced round in terms of due diligence, in terms of all the governance happen. So once they start seeing all these sort of points that the DD reports, they're like, oh, so are we not going to invest anymore, right? And then they start sort of slowing down and getting a bit uncomfortable. And what we really want them to do is understand that this isn't, no, we're not going to invest. These are some things that we need to understand. Some of them we can work on before we invest. Some of them we can continue to work on moving forward, because you're definitely not going to raise a Series B until you get all of this stuff done. Right? So it's kind of a double-sided problem, and we have an educational role to play, both with service providers and entrepreneurs, to get them ready for this kind of process in order for us to be able to sort of close deals a lot faster.
Right. We all want to close deals a lot faster and exit them faster. So Karim, I mean, you all raise institutional money, you have a certain investment period, and you're expecting to exit these portfolio companies sooner or later. I think Algebra has been in the market for quite some time, and you've had companies raise now a Series B round. But what are your exit options, realistically? Not everyone is going to be a Karim that exits to Uber or a Fawri that IPOs. So how are you thinking through real exit scenarios in the Egyptian market?
Before I talk about that, I'm going to talk a little bit about team and also relate and sort of the talent pool and the LP base and raising funds, because it all relates a little bit to exit. So I think one of the challenges in our ecosystem is there haven't been many exits in the past, and that's really the best education. You learn from your peers. So that's why Silicon Valley is great. You know, there's a lot of people who've exited or have been parts of major successes, and they teach each other. They may teach each other things about just simple processes of managing your financials in an appropriate way so that the DD goes quickly, but across the board. So there's this collective experience that happens, and you learn through osmosis from everyone around you, and that's missing. It's starting to happen. We have a few things, you know, Fawri is a great example here in Egypt, Karim in the region, and the alumni, so to speak, of those businesses are likely to then build up interesting future businesses. Of course, you know, IT Works and Link.net, other sort of older generation businesses that were in that space as well. So that's built sort of this alumni network that then people can feed off each other and learn from. And the exits also drive proving out the VC model, right? So as I say, why are local LPs not investing? Because the model's not proven, right? So the VC is a new concept here in this region. And in every region is going to be different, and the risks associated and the rewards are not clear yet, right? We haven't seen that much. We don't have that much of a runway over time, and we need to see that, and investors need to see that to start thinking of putting money in VC. Versus there is in PE, there's been a lot of homework done in the past, and there's deal flow, there's deals that have exited, so there's a clear there's a clear path for an investor to put money in that asset class, and there's a historical record. So I think that's part of the reason local LPs are still a little bit hesitant in this space. Now talking about exits, so where are exits coming through? So, you know, the only IPO of any VC-backed business in the region has been Fawri, right? So that's the only one that ever has IPO from VC-backed, at least that I know of. So that's unusual. That's interesting. So the IPO is probably the toughest path, and part of the difficulty of the path is also regulation. So, you know, Amazon could not have IPO'd in Egypt until 4 or 5 years ago because they've been loss-making for many, many years, right? So you cannot IPO on the Egyptian market as a loss-making business, right? So that's not going to work. So these restrictions are challenging sometimes for very high growth businesses that maybe they're profitable probably on a unit basis, but you know they're investing in growth, so their EBITDA is negative. So that's where you have a little bit of a challenge with going public. That's one issue. And then in general, anyways, globally, the number of public companies that exit to public markets is very limited, right? So that's not the common path. The common path is usually a trade sale to another corporate, a strategic who's interested in that business or in that space, who wants to expand market space or complete the suite of products that they have or access a new geography. So there's a few of these. And we've seen that happen in the region. We've seen that actually relatively frequently in the region, definitely in the online ordering space, in the transportation with Kareem, and a few others where it's clear that these are geographic expansions that other businesses are going into. And then in the core tech space, we've seen it happen from large players like Intel buying a local company that's focused on, for example, the Wi-Fi stack, right? So that's happened, and that we continue to expect to see. But the majority of actually, that's not the majority, I can't say it's the majority, but there's also a significant other path, which is through PE, right? So when the Fawry exited, the exit happened from a VC, that actually they exited to PE and then the PEs took it public, which is a natural path that happens frequently across the globe, but also is probably more frequent in our region, particularly for very solid businesses that have very good economics, and you know it's a natural path for PE to take it to the next level and drive it likely to public markets. But it's not as frequent as we'd like to see, but those are sort of the three paths that we see. We haven't seen many sort of local businesses buy startups, so the strategic investments have happened mostly from abroad. And we haven't seen much M&A internally within startups, and we hope to see that. I think the COVID crisis did spur a bit of that, and we've started to hear companies starting to talk to each other about combining their strengths and their markets and building a bigger, better business. So,
yeah, I mean, I think the path to IPO is going to be longer in this region, but it's also on you all as investors to kind of spur other avenues such as M&A. I think similar to due diligence, you have the investment banks and the lawyers still not used to having these companies being bought out by regional strategics and how to value them, how to look at them, which brings me to Hassan Abdul has a great question. Actually, I think Basil, you can answer that on valuation expectations and the governance that you want to see in companies before investing. And it's always a sticky point. So what have you seen? You're on mute.
I just realized I'm on mute. Sorry. It's a great question, but I just want to add something to Kareem's point. Good answer on IPO and exits and so on. But I think there's something missing. People confuse the concept of successful exit and exit. And I think there's this notion that exits can only be an exit if it's successful. It's not really true in the VC world. There's also an element of exiting, asset sales, or you have an exit where you just merge and get some equity from another party, and sort of they continue the journey, but you combine a client base or a technology base or a product base or whatever together. And I wish entrepreneurs here would learn that not every exit has to mean, a cash return and a positive and 5 times multiple. There's exits where you just have to realize continuing the journey it's not worth the return anymore, and somebody else can benefit from what you've built or done already. And I guess I think you were making that point, Kareem, is that people are learning that more during this difficult time than they should have been maybe learning it before or acting on it before. In terms of governance, honestly, reputations are made and lost on this one. I'm going to be very clear. I mean, I think we view that work of the governance of the companies as being a top priority at Global Ventures, and I mean that by we go over the shareholders agreement and we go over the board composition and the rights and cap tables and do a lot of analysis, just thinking about who has what rights and what can be blocked and what can be done. And there are many deals we've walked away from where if you don't have the right structure, it's just impossible to compose a deal. And it's partly why we love to sort of piggyback and work with certain VCs in the region as well, because we know the ones that care, and honestly, we know the ones that don't care. And the ones who don't care tend to be the ones who really make a mess of it. And there's a number of companies out there that I would say would be much more valuable and would be doing much better with a different governance or a different board structure. Typically, you find boards starting to grow to 7 and 9 people by Series B, which is kind of ridiculous. When it really needs to be people stepping off the board, but nobody wants to step off a board because there's a lot of egos involved. We look a lot about compensation and how entrepreneurs are setting their salaries and how that's determined. And we again get into the discussions. I think there's only one company that I know of in our portfolio that has a compensation committee at least, but that's a more later stage if you want type of notion. We look a lot we work a lot with auditors, and we do financial statements and getting those in place. So there's a lot of work that happens there. I will say the attitude is very binary. If we don't see an entrepreneur who understands the importance of governance, then it's kind of like walk away. If they understand it, but they just don't know what to do or they struggle, then we're more than happy to help. Valuation expectation is more the problem I see these days, and continues to be, frankly, even with the pandemic. I think Unsi touched upon this earlier, and I don't think the problem's gone away, but we see companies sort of doing, I'm worth $3, $4, $5 million, and then I'm worth 30, and then I'm worth 300. And I have no idea how they get, these 10Xs every time, besides an LP or besides an investor pushing them towards that valuation so that they can do their markup. And on the other side, entrepreneurs sort of thinking that the only measure of success is really valuation. So I guess I would answer the question and say it is a problem. It continues to be. And I think, we again, there's a lot of deals that have been walked away just on valuation. What's more important for me also are the terms that come with valuation. So even if you can get to a valuation number that makes sense, what are the terms that you get with it in terms of preference and in terms of rights and minorities and protection that are also becoming important. A little bit lately, just hasn't, a lot of preferred stock, a couple of participating preferred stock options we've seen, which is kind of aggressive. I've seen one full ratchet, if you can believe it. Maybe, I'd love Kareem and Timothy to hear from you guys and see if you're seeing more of that stuff, but it's getting a little bit more aggressive from the investor side because I guess we have this bull run and people are taking a little bit of advantage right now.
Yeah, it depends. I think one deal sometimes sets the market. So if there's one large deal, unfortunately, everyone thinks that that's the valuation. But I echo you, Bassel, on the issue of valuation has become what the key goal for an entrepreneur, which is this is like the worst thing to see, right? So it's not about valuation. It's not about what's my next round going to look like. Am I building a huge value as a business? And that's the important part. That will reflect in valuation eventually. It's not about just that I'm just climbing up the valuation ladder and some businesses will say, oh, I just want to drive my GMV, to be 10x next year, but it's like, is it profitable? Does it make sense? Do you have any competitive barriers in place? These are, I think, some of the challenges. And when people start thinking that scale is a competitive barrier, and it is to some extent, but not that it's not that strong of a competitive barrier. So there's these things I think are really concerning in terms of how people start thinking of valuations. And in the market, as I said, it takes 2 or 3 deals or 1 or 2 deals that are off that drive the expectations of all entrepreneurs. I think the best approach we can do is educate them on what we need to do, what we're trying to build as a business, so that they understand the VC model, they understand why do we need these kinds of returns. And that, if we don't, and again, if the few funds that exist today are not successful, there will be 0 funds in 3-4 years because no local LPs and, the IFCs of this world will no longer invest anyways. That mandate was kind of exciting and sexy for a period of time, and then it's going to go away. So we need that private money to come in, and that's only going to be successful if VCs are successful in the returns. So that sometimes helps us with that valuation discussion in terms of just describing to them what our model is, so that they understand why we're doing it this way and why we need to reach something that makes sense. And another sobering fact is just looking at the market as a whole. How many exits have there been in the region? How big were they? What are the ranges of valuations? People are talking about billion plus exits. There's maybe been one in the region, right? So, and it was an unusual one, and some people think it may have been even overvalued. But that's in many entrepreneurs believe they're going to have a billion plus company. It doesn't happen. There aren't many even billion plus companies on the Egyptian Stock Exchange. Companies that have been around for 20, 30 years, 50 years. They're not there, right? So that helps a little bit to kind of bring the expectations to a level that makes sense.
But I like that you're making them part of the process, because it's a very difficult conversation to have with the founders when there aren't enough benchmarks in the country, let alone and also in the region. So it's a very difficult conversation to be like, but in the US, X company that's like me is valued at, and you're like, yeah, but you're not that company, and you're not going to IPO there. But if you make them part of the process, like how you raised as a VC raised the money and where this needs to go for the health of the company as well as the entire market, that's an important conversation to have. Unti, you already touched on valuation expectations, and I wanted to ask, like, how do you also handle these conversations? And more so, I think there's some criticism not the right word, but there is some friction between different VC firms where you see entrepreneurs chasing the wrong KPIs because they think this is what's driving their valuation, and you're like, yeah, but that's not good for your unit economics, not good for your business model. So how are VCs really at fault for pushing entrepreneurs to chase the wrong KPIs and this part of what's driving valuation in different directions?
Look, I'm sure some VCs will push entrepreneurs in a certain direction. They may be right, they may be wrong. I think the bigger thing that we always focus on doing is it's not just where you are today, so I can give you a term sheet or a valuation. I think we as investors want to make sure we're 100% aligned with where the entrepreneur wants to go, and especially in the short term for his next round. So if you're raising $1 million today, what are the KPIs that we both agree on that you have to meet to get to the perfect world scenario of raising your next round at the valuation that you expect, to have your insiders follow on? Because the biggest problem is misalignment. Even if you're aligned on, okay, valuation now and everything, you may expect him with the money that he's raised to do, 6-7 things or reach, $3 million in revenue, and he only ends up with a quarter of that. What happens then? And then what happens if he wants to raise a new round and insiders are just supporting because they're worried about their existing investments? So that's the alignment that I always want to make sure we make at the beginning. And I think the focus, seed to Series A, is really to prove the business model and really to prove that you've really identified the market, you have product market fit, you have all that. But I think the toughest part that we've seen so far is really to take this from a startup, a growth at all costs types of company, to a sustainable business going forward. And I like to use the term profitable growth. And I think even the model in the US has slowly changed to people are putting a lot more weight on fundamentals, and they're looking to invest in Series B companies that will really use the money to grow, but not to get to profitability. And I think that's a factor that needs to really, an entrepreneur really needs to value his dollars, not overspend on burn without, the right milestones. If you're a pre-revenue business, any entrepreneur will learn, and that's the only way you improve. But I'd rather you learn with limited resources than to blow everything up and you've just started, to get somewhere when you don't have enough runway. I think cash runway and putting in contingencies and making sure your investors are also all aligned from day one to where you need to get to will really be a key success factor for the future. And I think eventually you need to optimize for profitability. Understand that our world really puts a lot of weight on becoming, the Ubers of the world. But like someone said actually in one of the comments, why do Egyptian IPOs only happen if companies are generating profits? So I don't think you could just go and grow at all costs and hope for something else to happen. I think there is always a fine balance between where you're spending your raised capital.
No, I like that term, profitable growth. That's what we want them to really focus on. Karima, I want to touch on talent, and Tamer, I'll get back to you on talent on the VC side. But I've seen Algebra, really do a lot of work in terms of trying to attract seasoned talent, including, MBA grads to whether to work at startups or to take up, co-founding positions or to start companies. And there's a lot of hesitation, right? Compensation is a big piece of it, upside, where they are in their careers and in their lives and their age. How do you usually advise people who want to join startups, and how do you attract talent to your portfolio companies? And do you think it's a good idea for people to pursue that in Egypt, if at all? Be like, no, stay in your nice, cushy job, don't leave it right now.
Well, talent is a huge focus for us at Algebra. As you know, that we do have our own talent teams internally. And in terms of what you said, you asked a question a little bit, is what's missing is talent in Egypt. I think there's plenty of great talent in Egypt. The biggest challenge is very hard to find. It's they're there. It's finding a needle in a haystack, and that's both on the tech side or the marketing, etc. There's availability. It's quite variable. The market, there's a broad range of talents, and they're quite hard to find, to identify and find the top talent. And we've built our own top talent network. We call it sort of Algebra Ventures Sigma, and we're building sort of a network in key functions. And not necessarily to hire for a specific business. It's really to introduce individuals, particularly in mid-career, in, let's say, a P&G or a Nestle or a Vodafone, that there is an alternative career path, potentially working with a startup in a VC, and we identify sort of top talents in both the traditional space as well as in other startups or in other business, not necessarily other startups, but just in other businesses as a whole. And try to slowly introduce them to the concept of working in a VC-backed high-growth technology business, and introductions to the different teams, etc. So it helps to bridge the cultural gap partially. Helps them understand what this really is about. These high-growth tech businesses that are getting these crazy valuations. Why the hell are they getting these valuations? Or what really makes it tick? Or can they get along with the different team members? So it's a much more subtle approach that we've used over time, and we've seen. I mean, this is not due to us. I think this is due to a lot of changes in the market. Again, some of these amazing exits by Fawzi and Karim and others. It's shown that this is actually a career path. There is an option here. They could be working in a company that didn't exist 5 years ago and really make it big and learn a lot along the way. And we started seeing it, and we could never have imagined a mid-career executive out of a P&G going to join a startup that's been around for less than a year. 4 years ago, that was unheard of. And probably starting 2 or 3 years ago, that's starting to happen, and it's happening frequently. I think it's across our portfolio. There's a range of very well-qualified sort of mid-career executives and above that have chosen to go into this sort of a little bit higher risk path of working in a startup. But there's also a lot of reward in learning, a lot of reward in ownership and leadership and building that business. And it doesn't work for everyone. It's not everyone's choice, but the businesses now are also large enough that they can also afford more reasonable salaries. I can say, someone who's at that stage of their career usually, has expenses that they need to manage, and can't be running it like a shoestring salary. It can't be just equity alone. It needs to be both salary and equity. But with the size and growth of some of these businesses, they can afford that level of an executive. And we're pretty excited to see that, and we'll continue to foster it and push it. Tech talent is a whole different challenge, but won't go into it now. But if someone cares to run through
it's
it.
A whole managing and reversing that brain drain. But I agree. I think I think the Algebra really was a very influential player in that, in terms of, as we saw more Series A investments happening in the Egyptian market, we've seen a lot of talent, not enough, but more and more talent jumping onto those companies that have raised a Series A, whether as to become their CFO or become, chief of head of growth, or more exciting roles. And it's definitely more exciting than what they were doing before. So I hope to see more of that. Tamer, when it comes to actually the VC career path, I think I wanted you to comment a little bit more on that, because again, people on the outside think, oh, VC is such a fun, exciting career. Like, this is where things are happening. At the same time, I've seen you, struggle to find the right talent on both analyst level, associates, and navigating that career in the Egyptian market. But I also commend you a lot on being very focused and actually attracting more women talents. I remember Tamer sharing a job description for an analyst and associate positions before, and he's like, please tap into your network of women, because I'd really like to form a more diverse team, and I really respected that. So how has the recruitment been on the VC side? How do you navigate the VC career, and advice for people who are looking to tap into that?
Sure. We actually ended up having 50% of the hires in the analyst and associate level be women. So that was the target. We pulled it off. I think a lot of people, there's multiple issues here. A lot of people who want to get into VC or who are around VC, you can either find someone who's a solid quant, who has very little exposure to what we do and how we do what we do, or you can find someone who knows a lot about startups and technology and all of this stuff, but can't execute a transaction or work to execute what needs to happen. So you usually end up with one of two choices. You can either recruit someone who knows the math and then work them through the ecosystem, or you get someone who knows the ecosystem and you work them through the math. But finding someone who knows the math and getting them to work through the ecosystem is a lot easier, right? But then you hit the next barrier is, okay, so why would someone who's working in private equity or investment banking, who's used to a fundamentally different sort of back-end office support system and bonus structures that are fundamentally different and compensation packages that are fundamentally different and incentives that are fundamentally different, to come and jump on board and join a VC firm, right? You really have to love the job, and you have to be really into it, and you have to really know, okay, what am I really giving up? And that's not actually a very easy thing to ask people who have been conditioned for a very long time to aspire for these very, very specific financial services and consulting jobs, right? So there's an entire generation of people who have been conditioned to pursue very particular financial services and consulting jobs, right? And you need to spend a lot of time nurturing these people and really helping them understand that the shift is not as complex as they might think. And it's actually, a lot of the skills are transferable, but they just need just a really teeny bit of a mind shift.
Yeah, I remember when I was thinking whether or not I want to get into VC, Tamer was the demonstrator of someone who just loves what he does. He's like, I love it. I love the deal chasing, the sourcing, the execution. I love all of it. I'm like, oh, wow, he's a VC person through and through. Okay, it's been almost an hour without getting into COVID, which is quite interesting. I don't think any webinar started without talking about Corona from the get-go. So I want to get into how are your portfolios doing, and how have you been helping them? What have you done to make sure they're surviving, or maybe they are one of the outliers or the select few who have benefited a lot from the circumstances. So Basil, why don't you tell us a little bit more how your regional and especially Egyptian portfolio is doing, and what has Global Ventures done to support its portfolio companies through this time?
By the way, I did an interview this morning with someone who told me, I want to join VC because you guys make a lot of money. I'm like, well, maybe, but it's going to take some time.
Very good.
10 years at least.
Exactly. I'm like, you have an idea, your timing might be off. Anyway, joking aside, listen, I think the answer to the question is simple. Nobody knows, we don't know. We've done a hell of a lot of work. We've been much more engaged with our portfolio companies than any time in the past. And, talking about weekly calls and, looking at everybody's runways and cash and providing support and supporting them through, activities like reducing costs or laying off people. There's been a lot of work, but the short answer, I don't think anybody knows. And what I mean by that is The pandemic is not over. There's still going to be other spikes. The function of whether companies survive this or not is really external as much as it is internal. Yes, we expect, and a lot of them have taken decisions to reduce, their burn and extend their runways, and maybe even raise, in some cases, some additional capital as padding. Some have pivoted their businesses, like, Luncheon went from lunch in the office to, well, everybody's home is an office, so let's deliver to the home, and now added dinner, and everybody's doing all sorts of things. But I think the simple question is, how long is this going to last? So if it lasts until the end of this year, I think we'll get out of it, right? Most companies will be able to survive. There'll be recovery. Some may not be able to raise, but I think everybody will be okay. If this lasts longer, which is our expectation, by the way, at Global Ventures, that this is going to spill into next year and sort of run the better part of next year, then I think we're going to still see the damage coming, right? And I don't mean that to be negative. I'm just saying it's better to be, a bit scared in these situations and working off of that scenario than to be optimistic and think, look, the number went down by, it was 10,000 people, it went down to, 9,000 people. That means COVID is over. It's still 9,000 people getting cases every day, right? Or and there's still an effect on economy, recession, this lack of travel. People have lost a lot of money, and I don't think travel's coming back that quickly, which means tourism, which means retail, which means the knock-on effect of one industry on the next. I like our fintech portfolio. I think those guys will do well in the middle of all of this. The few e-commerces that we did do, Karim, they're doing well, they're surviving, and they're actually benefiting. Food delivery and so on has been a little bit mixed. A bit down at the beginning and then up all of a sudden and then down again, and then so it's sort of bumping along, but I think those guys will ultimately benefit. Mobility has been hugely impacted, right? Anything to do with transportation. Health tech has been hugely benefited. As Unsi mentioned, we have one investment, looking at a couple more, and I think those guys are seeing a huge uptick. So it's a mix for sure. But I don't think the jury is clear yet on who's going to survive this when you think about the next couple of quarters.
Sorry, guys. Really sorry to interrupt. I had mentioned I have a US board call. I have to jump off. But I thank everyone that joined to listen to me and everyone else. And thank you, Amal, especially for hosting this. It was great. And thank you all to my co-panelists. I hope to see you all very soon.
Thanks, Lutzi.
Take care.
See you soon. Cheers.
Karim, do you want to add on that? Because I think the thinking is people, the VCs give you money and they'll, wish you best of luck and call us if you ever need anything. But call us if you need like introductions or something like that. We don't really want to get too involved. So how do you help your companies through thick and thin?
I think Bassem touched on several things we did similarly as well. First of all, start in early March, crisis meetings with every single company. Again, looking at cash runways, etc. And trying to assess what might be the impact of COVID on each of the different businesses. Some, for example, travel, and that's a co-investment with Bessel as well. That was zero, right? That's an impact from X number to zero, like millions of dollars to zero overnight. That's a tough one to swallow and a tough one to deal with, right? The many others have either, just to reduce traffic rate or reduce usage, and for one we didn't mention across the board is also an exciting space is education, and education was an interesting play, and that became very important. Health and education became very, very critical, and providing online services of health and education, which people traditionally were very uncomfortable of using online tools in that space. That shifted dramatically, and I think the general shift that happened with COVID is you had an opportunity, if you had an interesting business, an interesting application, to showcase it to the world, and people would at least try it. You got past the first hump. One of our biggest focus with businesses, the ones particularly that did get that advantage, was everything you need to focus about now is execute perfectly. Because now all that just happened is you got your first customers, or you got your incremental large set of customers that you didn't have before. And if you're not executing perfectly, they're not going to stay after COVID. Right now, they have to use you. There's no other choice, but they're not going to have to use you forever. And you need to build their habit right away, right now. And that was a very, very important thing that we focused on. The few businesses, which are even probably a third of our portfolio, are in that range, which had sort of an advantage from COVID or a bump up. And for those, our focus was heavily execution. I was like, even if you don't grow, I don't care about growth. I want to make sure the few customers that you did get, you focus, 100% on just making sure they're happy, they enjoy the service, they're getting what they need, because that's to make sure that they continue on, right? So you get a proper lifetime value out of that individual customer. So that's one area of focus. Handling some HR issues, right? So and many of the businesses had to either reduce costs in a bunch of different ways, right? So we start looking at anything that's related to revenue. We kind of try and reduce costs there. In most cases, we try not to cut workforce. In some cases, there's voluntary choices by the management teams to reduce their salaries, to extend the runway. And we also try to give them an outlook of what fundraising looks like. So we brought in VCs from different regions to talk about that a little bit, to start thinking about what does that mean? Will fundraising be miserable in 6 months, or is there going to be stuff available out there? And then roundtables for them to talk through different issues and for us to introduce various topics, particularly around HR, managing the communication related to COVID, managing the health and safety of the employees, which was our number one concern from day zero. And particularly since we have quite a few businesses that have operations on the ground. And for that, we needed to ensure that they took it seriously, that this is not a joke. This is, unfortunately, many people have, but I think within our businesses, they've taken it quite seriously. And luckily, we haven't been impacted that much. But that's I think, the range of support. The last piece is some businesses needed to change the business model. They were either gone and gone forever. And we helped them even with funding to try and pivot to somewhere else. And one of the things we did early on as well is we created a relief fund for all our startups, blind, that provided them with a few months of cash to either realign, rebuild, rethink, or extend their runway to a period of time where they can fundraise. And some businesses took that opportunity, that relief fund, others didn't. It wasn't a very large amount, but it was an ability to give them some breathing room to start thinking about, okay, how can I react? How can I change direction? Or how can I find the right market that now I can go after, given that one of them may have fallen? I think the part that and Bessel touched on it, very, very important issue is the macro effect of this. We haven't felt it yet, really, not very seriously yet. But the macro effect of this is going to be quite significant, and it's going to depress the market as a whole. How long that will last is unclear, but in Egypt, being very tourist dependent, being very much dependent on receipts from foreigners or Egyptians working abroad, and with many cutbacks in the GCC particularly, there may be issues with remittances and with tourist receipts that will depress the economy as a whole. But given that most of our businesses don't have that high of penetration in each of the economy spaces, that may not be a big issue in the short term, but it does limit their full market size.
Yeah, I think the macro effect is expected to hit Egypt in the second half. So it's coming. We're not gonna get off the hook for that one. Given all of that, and I really love that Algebra also had a blind pool funding facility to give the startup some runway during this time. But the big question for everyone in the ecosystem is: do these funds still have is there really still dry powder? How is the fundraising environment going to be like for Series A and for Series A startups? Are you becoming more and more selective? How do you see your own fundraising? I mean, you have to disclose if you're going out to market this year or next, but I think there is a real concern and worry among the ecosystem that these funds have run out of money and they'll only make a couple of deals in the next 6 months or so. So
I'll answer a little bit of it. I think the fund, we definitely have dry powder. I think everyone here in this group has plenty of dry powder to execute interesting deals. I think some of the lapse in funds funds deployed more recently, probably in the last 3 months, is as we were just all talking, we were very focused on our portfolio, right? So we're trying to solve that, which took a lot of our effort and a lot of our energy away from creating deals. So having said that, I don't think anything we were working on really lapsed, but it's just the focus of the fund was really protecting the portfolio and helping and supporting the entrepreneurs we'd already invested in. So that's one, and I think again similar to many of the funds here, we always have kept a lot of dry powder for our existing portfolio companies. So we maintain that and we'll continue to maintain that to support them in follow-on financing. That's something we learned the hard way, I guess, from previous funds that we've seen that just dried up and weren't able to support and the great companies in future rounds of finance.
So for follow-ons.
For follow-ons, yeah. I suspect the VC fundraising environment might be a little bit challenging again, because a lot of even the LPs are also in the same mode, right? They're all focused on my existing businesses, whether it's a private family office might be very focused on their existing business, shoring up everything, making sure everything is going well. Some of the large DFIs might be focused on mega relief efforts in different economies. So that it's an issue of focus rather than appetite for investment. It's a little bit, there has been a shift of focus, and I think that shift will come back. It's still going to be more difficult to raise funds, but I think within the VCs in the region, the ones that have been actively investing in the last 6 to 12 months, I believe most of them are still able to invest and continue investing in it, and will do so shortly. And you'll start hearing many more of these financing rounds coming up very soon.
Tamer's been closing deals left, right, and center. Yalla, Tamer. I said Tamer's been closing deals left, right, and center.
Yeah, just announced one today.
Making it rain. But no, yeah, absolutely. I think everyone on this panel still has dry powder. I think everyone's still investing. I'm really excited about what the pipeline is going to look like when things sort of settle down. Mostly because there's an environment where there's a bit of survival for the fittest there. We see who comes out of it, and then you see everyone's portfolio. Those whose portfolio did well and didn't sort of require a lot of assistance will have a much lower opportunity cost than those whose portfolios required a lot of assistance. So once all the dust settles, I think dynamics are going to shift a little bit. It'll definitely be nice to have a lot of capital coming into this, and I think most of us do, if not all of us. So there's going to be an interesting sort of shift, I think, in the pipeline, in the maturity, in the survival instinct of those who make it out of there. In terms of fundraising as a VC, I mean, Karim explained this quite clearly and was very sort of comprehensive. LPs, a lot of them, especially in this region, are either first-time LPs in a first-time fund manager, first-time LP in the asset class in the region, or period. So there's a lot of, we're all doing a lot of firsts together, and we should all sort of appreciate that about all of us, whether LPs or fund managers. There's a lot of firsts. There's a lot of us bringing new LPs, not just to the asset class, but to the region. There's a lot of us bringing in new talent, and it's going to get better if we keep doing this together, and if we keep being transparent and honest and clear. I think the market will become a lot more interesting, to me at least, in the post-COVID world.
Can I jump on?
Please.
So I was on I mean, it is a unique situation. The dry powder thing is not only in our region or in Egypt, it's everywhere globally. There is some people who believe that this is what's going to save the VC world, because so many big funds were raised in the last period, and not a lot of it was deployed, that the chance for that to sort of smoothen out the dip, if you like, is possible, because again, funds will have to, not all, but most will have to deploy. Sure, there'll be some discussions on valuations and the things we touched on, but so on. I think in our region, though, it's slightly unique. Okay? This is, you know, don't misread the global picture and some of the things you read in the newspaper, because yes, there is dry powder in the region, and I do think people are deploying, but it is a chance to be much more selective. It is a chance to discuss terms a lot more aggressively. And I think if in my mind, I think there's kind of 3 phases. All the deals you heard about in March, April, May, even the ones happening now in June, are left over from a time before, possibly, right? People had started them probably before COVID and are just started completing them. Maybe the terms changed a little bit, but most people are convinced on the long term, it's a good deal, let me do it. Now you're starting to see the real pinch, which is new deals coming that happened at these some crazy valuations, or let's say exaggerated valuations. Now some tougher discussions. I mean, I probably turned away more deals in the last couple of weeks than I did, let's say, at the beginning of April, right? Because I wasn't getting new deals and I was just completing the deals we're on, and there was a little bit less flow. People were busy with portfolio. Now that people are coming to market, I think the pinch is happening now. And I think the failure rate is about, you know, failure rate to raise, maybe not necessarily failure rate of a company, the failure rate to raise is about to spike, in my opinion, in the coming period. And then I think there's a last phase, which is, you know, either more money comes into the sector and we're all back to business, or the people who have remaining money are going to be even super selective and super pushy with it, right? Or very, very selective on the deals. That's my just, you know, assessment of the situation. But I don't know, Kareem, you agree? Disagree?
I agree a bit, and I think the focus is going to be on robust and agile businesses, right? So the robustness and the lack of need for excessive capital to succeed and to compete effectively in the market is going to be important. So the hyper capital intensive businesses are going to have a very hard time fundraising, and many of the ones that are now going for B and C rounds, I think, are going to have even more of a challenge unless they've really proven out a highly profitable model that, you know, can reach a break-even point without massive capital soon. So I think that's definitely going to be a tough one to invest in this period. And I think it's, you know, there's an interesting thing about thinking about during this phase. Many, you know, unfortunately, many people may have been laid off, or many people are working from home, have a bit more free time. They're not going out and partying or whatever, or dining out. So you're expecting, and this typically happens in sort of recessions, depressions, all the new interesting ideas come up now, right? I think there's a unique challenge with COVID is people aren't able to meet each other, which is, it's hard to build a team and build a company in that context. I'm not sure how that's going to evolve, but this could be a very interesting time where great business ideas are incubated. And this typically has happened in these down cycles. This is a unique down cycle because people can't really meet easily. I mean, it have to be people you already know. You can't meet new people that easily. So that it's yet to be seen whether we're going to see that really cool, interesting businesses come out of this cycle, this sort of recessionary cycle that we're in because of the unique COVID constraints. But we think there's going to be some really cool businesses that come up soon as people have more time to think and reflect and choose to go for more unique opportunities going forward.
Yeah, we hope you're still believers, because if you give up, you know, what's left. But I think it'd be very interesting to see how the different funds investment thesis has evolved in like, you know, 6 months from now, how you've changed your thinking, because I think increasingly we're seeing VC funds pass on deals that probably they wouldn't have passed on 6 months ago, or definitely not a year ago. And but we're also seeing businesses become more resilient, and these are the ones, you know, to stick to in terms of value investing. I want to get to the Q&A because we've been getting a lot of really good questions. Some of these questions we've touched on already, but let's take what are some of the mistakes that you see companies that are trying to scale beyond Series A making? What is usual? Why do companies fall in that death valley between seed round and Series A? And once you get to Series A, I think then by Series A you have enough institutional investors, or you have an investor base that can take you to Series B. But why aren't they able to break through that? And can you maybe can start us off on that?
I'm not clear. Is that C to A or A to B?
I think the value is really actually between seeds of Series A, but I think the question from Omar Hamdallah is the scaling beyond Series A. And since you're all Series A investors, what happens after Series A? Why do companies follow?
Yeah, scaling after Series A is actually a very difficult phase. And having started a business, it's very interesting when you're first 0 to 10 employees, and then you get to 50. It's a very different company. You get to 50 to 150 or 200. It's a totally different company. And what makes you successful when you're a very small company is a very different thing than what makes you successful when you're over 100 people, over 1,000 people, etc. Right? And are you able to really manage that talent effectively? Are you thinking through the people processes in a systematic way? Are you thinking through how you communicate as a company? Are you delegating activities and functions? It's a lot of organizational stuff that not every single entrepreneur is ready for, right? And that's usually where they try and hire good talent to support in that area. And that's, our first task actually after an investment is we'll run through the whole org chart and start looking at where the gaps, where do we need to build, where do we need to fill this in to make sure this company is ready to scale. Because getting ready to scale and scaling effectively is not an easy task, and it's a lot of cultural actual challenges that happen inside the company, a lot of process challenges, and that's not normally what the innovative entrepreneur has been really thinking of in the early days. They're thinking about really cool products, a really cool business model, and how do I get to market? How do I get my first few customers? The next stage is quite a bit tougher. And it has to do again with the scale of number of people you're managing that are in the business. And the scale of your operations, which require processes. They require some of the boring old stuff like processes and culture, and a few of these activities which are tough to do, and are going to be tougher, obviously, with not being physically in the same space. Some of our companies have reacted very well to working from home because they were already kind of doing that or partially doing that. Others are having bigger challenges with that. So it's these challenges that are tough when you're going from A to B. And keeping your eye out on also the finances is an area where a lot of them break down, right? So they may have never had like a proper financial director. So they're never able to reconcile their numbers. It gets very confusing. And that's sort of our role, again, from a governance perspective, make sure we're seeing the finances on a regular basis and pushing them to hire the right people, to put in the right systems, to see where they're going. Because if you can't see the numbers, you're flying blindly, and you're going to likely.
Can I summarize Karim's point into one word?
Mm-hmm.
Right? Automation. No, seriously. I think that if companies don't build a business that can repeat itself very systematically with very clear numbers and KPIs and structure and so on, it's no longer your friends and family. It's a business, and it needs to scale. And if you don't know how to transition from that, we all love each other and let's build some cool tech together, to a scaling business with productivity or automation built into it, then you just end up spending money on all the wrong things, right? Sorry, Karim, I don't know if that's what you.
That's definitely one of the key items in there.
Yeah.
It's just.
I think you're aligned.
I think, and I don't think people understand this. And I hate to make this West-East comparison, but I will. They don't understand this level of automation that you need to get to, like building dashboards for your team members so everybody knows what KPIs and not showing up to the board meeting kind of like, yeah, I think I have my financial statements, right? that doesn't work. Get really worked up on that.
No, fair. And I think this is where the hard work on the investors' falls, getting them to actually do this work, because no one wants to do the boring stuff of getting a proper financial controller, CFO, getting the right statements, but you're really prepping them up for their next round. Actually, we have two questions from Sophia that I think you've touched on in terms of if there isn't enough dry powder or liquidity is going to be questionable over the next period, should startups start to explore other avenues like M&A? Maybe, you would sell out sooner than you thought because it'd be more difficult to raise your next rounds. And do you think crowdfunding or blockchain platforms are alternatives to VC funding?
I think they're thought of as alternatives. I don't think they are. I think they have very different purposes. I think crowdfunding platforms are very useful for those who have a B2C proposition, who want to bring out PR along with the money. That works best. It doesn't work best for, you know, an enterprise software developer or a cyber security doing crowdfunding on its software. How does that work? Blockchain, I don't know much. I'm still yet not there on, you know, the blockchain is going to take the world over from a funding perspective. Blockchain could be useful in other cases as a measure of technology or as a use of technology. But blockchain as a funding, I think we've seen the wave of all these, you know, crazy cyber or you know, crypto, I guess, coins and all that stuff. It's going to go, it's going to come. I guess there'll be some boat parties somewhere about it, and then the party's over, and then we'll see what happens after that. Everybody wakes up in the morning. So I'm not a big believer in that. So those two I don't see as alternative, because I still believe VC, you know, money is not just money, but it's also a relationship, a partnership, it's connections, it's strategic, it's the things Kareem and Tamer have talked about in terms of recruitment and hiring and people and automation. You know, it sounds funny, but I enjoy discussing with a startup, like, let's do the accounting or the KPIs this way, right? Let's figure out a model that will be something you can present to other investors in the future and wow them with it. M&A is the most undervalued exit path. I think I said it before, and I think it's still, people do it too late. They do it too stupidly. There's a lot of egos involved and a lot of, you know, frankly, bullshit that plays. A lot of it is, you know, maturity of the entrepreneurs, even the investors, and so on, to make things happen. I think people forget that money has a time value, and that sometimes, you know, getting half your investment back and using that for the next opportunity is a better return than trying to keep the same idea running for another 6 years لغاية لما تكح تراب زي ما بيقولوا in Arabic. So I guess, you know, my point being is, people need to look at the M&A exit faster, and you should be talking with your competitors as startups along the way. There is not an antitrust law against startups talking to each other, by the way. Talk to your competitors, share thought. Don't share your customers or something. Maybe that's not the best thing to do, but if you build relationships and find the ones that you could merge with down the line, then you're creating options for yourself and your investors, and those exits could be equally powerful.
We have an interesting question, because I haven't seen that happen that much in Egypt, or I don't know about the rest of the region yet. And this is for all of you. Have you seen cases where, oh, it's a great idea, like the company, the venture is doing well, but the entrepreneur or the founder is not the person to take it to the next level, and you as investors with the board have asked them to step down? Or do you think there are situations where the founder needs to step down and bring in another executive to take it to the next level? And I think this is how people picture VCs, right? You're the evil people who come in and like put the founder aside, let us run the company, let us find that winning dream team who will go public.
I've had to answer this question 80 million times. Are you going to have the right? Are you going to remove me as CEO? Are you going to? How do you invest? Is that what happens? Do you manage the company on our behalf? Am I going to have to go home, or am I going to still have this? Am I going to still have that? And it's so entrenched for so long. I don't know why people think of it that way. I don't think any of us has done it yet. Maybe it happened once or twice, but it's something that's so entrenched in the psyche of a lot of the entrepreneurs. I don't know where that comes from. I don't know why they feel that way. But if I were to guess, I'd say because, I don't know, maybe 7-8 years ago, we're investing in majority, to take majority control of a company, right? And I think we spent quite a few years where this is how people invested, or at least how young companies, that was their first interaction with an investor. And I think we've spent an enormous amount of time recovering from or just trying to out-explain that that's not really a thing. I don't know if Basil and Kareem, you've had
but Kareem and Basil, you must have seen cases where enough.
Yeah.
You know, your chapter with the company is over.
Yeah, and I think all of us fundamentally invest in teams, right? So the heart of why we're investing is not because of a market or whatever. We see a great team, they have an interesting product or opportunity, market opportunity, and they're running with it. If we could do it ourselves, why the hell are we doing VC? We should be doing it. So we're relying on that team to execute, and we're relying on that team to succeed. And that's our fundamental premise. So there's no interest in us in terms of removing CEO, blah, blah, blah. I think where that changes sometimes, and where there is those exceptions that happen, is, again, as I said, it's not always that easy to transition through these stages of growth of business. Something that may have worked very well, you were doing awesome in the first, when it was like 20 or 30 people. Once it's 500, you don't know how to manage it anymore. Or once it's 300, there's a challenge, right? So that's usually when that, in some cases, classic example is Facebook, brought in a super experienced COO. Mark did that too, because he couldn't do it. He didn't know how to do it. He had no clue. So he brought someone who's a super experienced chief operating officer to handle the business. And once it reached a scale that was very difficult for them to handle. So that happens. And it's usually, again, when it's clear that the organization is breaking down, it's unable to fulfill the promise it's trying to reach at, right? So, and that's typically an organizational issue, not because of, dishonesty or out of just, a challenging personality. That's not the issue. It's just the organization has become dysfunctional because it lacks the right leadership for that stage of development. So that's typically when, we'd want to trigger that kind of activity. That's it. No thoughts.
I think everything's been said. I don't want to add anything unnecessary. Sorry, can you hear me?
Yeah.
Or is it okay? Sorry. I think everything's been said. I don't want to add anything unnecessarily to the thing. I really like the companies, and I remember this from my time in California. I'm sure you remember this way back when, where the founder is the CPO, the product officer, or the CTO, not the CEO. I think that's really interesting model, right? It's kind of like, I'll do the part that I really enjoy and I'll leave all the other crap to someone else to do. And it's a very interesting dynamic, right? Because they report to the CEO, but they're usually a large shareholder and sit on the board. So they control the CEO as well, but they can put them in front of everybody, let them deal with all the problems, firing, hiring, administrative things. And I think it's something for founders to really consider in the region. You don't need the title of CEO. Is this my line that's causing all this confusion?
Unclear.
Not clear. I think it's Kevin's line.
I think we pretty much, through your answers, it's pretty clear how everyone adds value to their portfolio companies. The portfolio value creation is very obvious in what you do on a day-to-day basis with these companies. One of the questions, and we have just a couple more that I want to go through, is the different size of the firm. So is it because if you're just in Egypt, it's a smaller team, regional, probably a bigger team, or why people are curious, why are VC funds just small outfits of two analysts, two associates, maybe a principal, and the general partners, or is this because of the size of the market, or the asset class in Egypt specifically is still in its early stages? And how I know with Algebra, for example, the thought process about how the career path in VC is going to be like, do you hire analysts who will then go to business school, or going to go join a startups? But there are those who will continue down the line to become principals and partners. How do you see that evolving in the market today, Tamer? Karim, you're not going to be off the hook too. Just muting you for now.
I think a lot of what VCs do is centered with the partners. A lot of the value creation, a lot of the easy part is the deal making, right? Is the finding, identifying, and sourcing the deals. And then once you've sort of made an investment, a lot of the hard work and a lot of the time consuming work and the support goes to the portfolio, right? So it's a bit of a different concentration, where a lot of the work is sort of weighted in this area, in the earlier sort of roles, you have smaller teams because the funds are smaller, and you have longer sort of periods to promotion. If I was working at an investment bank or a consulting firm, I'd expect to be promoted every 18 to 24 months, right? That's not how it works in a VC. You need longer time horizons, not that much longer or you're going to lose your people, but you need slightly longer time horizons. They have a lot more to learn. There's a lot more nuances in deal making and in process around VC than is a lot of other places. And there's a lot less infrastructure within VCs that allows these younger people to move up faster, right? So if I'm at a firm with 100 or huge, you know, big investment bank or huge private equity with like 12 or 15 or 20 even funds, there's all this wealth of knowledge that just moves around the organization all the time, right? But there's a lot more nuanced knowledge transfer that needs to happen in VC. And not everyone is actually equipped for it. And you need to really invest a lot of time in the young people that come into the firm and really get to see if they have that, right? That's a very particular skill set. It's a very particular nuanced trait. And you can develop it, of course, but there has to be some sort of signs that this is plausible and possible, that that person has what it takes to actually be a VC, right? So it's a very different path to the top, so to speak, I'd say.
No, I agree a lot with Tamer, and you know, they do tend to be smaller teams here in Egypt and globally. It's nothing different. There are some firms that operate in a different model that are a bit larger, but in those cases, they're usually managing multiple funds, not a single fund, or you know, multiple generations. And I think many start thinking of VC like an investment bank or like another financial institution. And it typically isn't that way. It's not, it doesn't run into, here's a tier of hierarchies, I'm gonna grow up into this firm and grow into management. It's for a lot of, at least at the more junior levels, it's a transition point. It's either, you know, I wanna build a startup, so maybe I should get on the inside and understand how this works. Or I might want to go into investing in this technology field, so I wanna learn more about it. So there's a little bit, I think, someone who's interested in VC needs to think of it as a learning experience as much as not necessarily a direct career approach. Because even VCs who started, or people who are partners that have started at associate levels, typically it's not the same firm. They may have started associate in one, become a principal somewhere else, gone and worked at a startup for a while, become head of marketing or whatever, then went into a partnership role in the VC. Because it needs that combination of having seen the world in a set of different ways, knowing how businesses operate, and it is not as classic as in the typical investment banking career, which is, you know, a very clear direct ladder. There's a lot more lateral movement, and that's sort of the nature of the business, and a lot of it, you know, going and exploring, actually working in a startup or working in another traditional business or in finance in another space. So there's a few different alternative paths. It's not a very direct path like you typically go into another corporation.
And for many, it's a stepping stone. So like you said, starting a company, doing something different. Last question, Basil, what is what you're doing different from angel investing? And because there are a lot of angel investors here, and also would you, I know you're all Series A investors here, but do you invest in any companies pre-revenue? In what cases would you invest in a pre-revenue company?
Well, you better really believe in the team, I guess. No, I get, so in the fintech space, we've made a couple of investments that are earlier stage than revenue or product for that matter, because we really believe in the team and the idea that they have, but also because fintechs have a special sort of curve, if you like. It's a little bit different than other sectors. So we wanted to get in a bit early. And if we felt if we didn't, the valuations later on would never be justified. That was a position we took last summer. What's angel investing and what's VC investing? Well, there's some overlap for sure. And I've seen angel investors who are basically pretty much VCs with a team and people around them and everything else. Maybe it's a phenomenon of the Middle East. but even globally, I've seen these cases. I think VC investing is the beginning of institutional relationships. Things like governance, things like reporting and so on, like we talked about earlier, become important. I think we see ourselves as partners who have value add in particular things. Our focus is a lot like Karim's and Tamer around HR stuff, so people and recruitment, but also around business development. We do a lot of work introducing our companies to opportunities or business opportunities through whether it's our advisor or LPs and so on, because we think, getting the first million is great. Getting the next sort of 5 or 10, it really changes the dynamics of a company, of a business. So that's some of the things that we do. But I think ultimately, it's also about having a company, I guess, or an asset manager, VC fund, being able to speak on your behalf to the outside world. So a lot of the companies that we invest in, when we become investors at Series A, we are now their investor relations department, if that makes sense. So we're taking on that responsibility going forward. And I think with angel investors, there's more about, is the product fit, that working? How do I price it? It's not that those things go away, but that's where the focus really angel investing ends up being. The idea, the product, the sort of, will this work or will this not work? We try to pick up after that, I guess, and run with the ball a little bit further down the line. That's the way I think about it.
You're muted. You're muted.
It had to happen. But I wanted to thank you all for taking part in this webinar. Unfortunately, we have to wrap it up, but I really hope we all get together for coffee or drinks, as someone suggested here, because I think everyone else wants to hear from you and see that collaboration in person. I want you all to just say your last remarks by answering that last question that we just got, because it's a favorite of mine. Are you ever too young or too old to start a company? And is there a correlation between age and success of a startup? So, your last thoughts on whether it's a good idea for alums to start a company, and if they've already missed that train or not.
I don't think there's an age for it. And actually, I think there's a statistic. It's actually the most successful startups are ones that have, founder ranges in the 45 range. So it's like, that's a relatively older number. So it's not, there. I don't think there's an age. I think the issue is whether you can 100% dedicate your time, you have the tenacity, you have the energy and the hunger to do so. So those are the characteristics that make successful entrepreneurs. And age is not necessarily a factor in that.
I'll give you, Tamer, the last word. Just say, I agree with. Sorry, Tamer, I'll give you the last word.
It's real tough to disagree with that. Like, what am I going to tell people? You can't. No, it's totally true. I think your priorities and what you have to have in place or set up, changes and what kind of leaps of faith you can take, and the size of the leap and the timing of the leap changes in your depending on your age. But absolutely, there's no reason why you can't start a company later in life or early in life. There's no rule here.
I was just gonna say you can't be too old, but you can definitely be too fat. Which means, if you're like me, you're not gonna have the stamina for this. You just enjoy helping others, being successful. Now, joking aside, I agree with what Karim and Tamer said, but I think if you're gonna do it at a later stage in your life, do it by bringing the insights from your experience. You don't have to outrun the bear. You got to outrun your competitor, right? And make sure you use the experience and the insights you have from your work experience to really be clever about what you do. Just not doing what others are doing.
Well, that is certainly ending it on a high note. Thank you, everyone, for really participating. I think it was such a unique opportunity to get you guys in the same room, so to speak, and have an open, candid conversation about the market. We definitely don't have enough time to cover everything, and I hope we pick it up in person when things open up. So hope to see you all in Cairo soon with our alumni community.
Thank you for
Thank you
having
all.
me.
Thank you.
Thank you. Have a good night.
Thanks, Emma.
Cheers.
Take care, guys.